Commitment to Our Readers GOBankingRates editorial team is committed to bringing you unbiased reviews and information. We use data-driven methodologies to evaluate financial products and services. Our reviews and ratings are not influenced by advertisers. You can read more about our editorial guidelines and our products and services review methodology. 20 years helping you live richer, reviewed by experts, trusted by millions of readers every tax season. Millions of Americans await their refund check for the biggest payday of the year. However, personal finance expert Rachel Cruze warned that those thinking of their tax refunds as if it's free money is a mistake that could cost you in the long run. Here are some key points to consider when receiving a tax refund. Understanding your tax refund. A tax refund is a payment made by the government to a taxpayer who has overpaid their taxes. This can happen for various reasons, such as incorrect tax withholding. If your employer withholds too much money from your paycheck, you may end up paying more taxes than you owe. Changes in tax laws. New tax laws or changes in your personal circumstances can affect the amount of taxes you owe. Refundable credits. Certain tax credits, such as the Earned Income Tax Credit, EITC, can result in a refund if you qualify. This change can have a significant impact on their tax liability. Understanding the impact of inflation on tax brackets. The IRS adjusts tax brackets annually to account for inflation. This adjustment ensures that the tax system remains fair and equitable, as the purchasing power of the tax brackets decreases over time due to inflation. The 2022 tax year saw a significant increase in the number of filers who may find themselves in a lower tax bracket due to this adjustment. How inflation affects tax brackets. Inflation erodes the purchasing power of money, causing the value of the tax brackets to decrease. As a result, the IRS adjusts the tax brackets to reflect this decrease in purchasing power. Here are some reasons why. Why paying off credit card debt with a tax refund is a smart move. Paying off credit card debt with a tax refund can be a smart financial move for several reasons. Here are some key points to consider. Reduces financial stress. Paying off credit card debt can significantly reduce financial stress and anxiety, allowing you to focus on other aspects of your life. Saves money on interest. By paying off the principal amount, you can avoid paying interest on the debt, which can save you a significant amount of money in the long run. Improves credit score. Paying off credit card debt can help improve your credit score, which can lead to better loan terms and lower interest rates in the future. Increases financial flexibility. Paying off credit card debt can give you more financial flexibility, allowing you to make other financial goals, such as saving for a down payment on a house or retirement. How to use your tax refund to pay off credit card debt. How to use your tax refund to pay off credit card debt. If you're considering using your tax refund to pay off credit card debt, here are some steps to follow. Calculate your tax refund amount. Determine how much you'll receive from your tax refund and how much you can realistically use to pay off credit card debt. Prioritize your debts. Make a list of your credit card debts, including the balance, interest rate, and minimum payment due. Prioritize the debts with the highest interest rates or the smallest balances. Create a payment plan. Based on your tax refund amount and debt priorities, create a payment plan that outlines how much you'll pay each month and when. It's a vital component of a comprehensive financial plan, providing peace of mind and financial security in times of uncertainty. What is an emergency fund? An emergency fund is a pool of money set aside to cover unexpected expenses or financial setbacks. It's a safety net that helps you avoid going into debt when unexpected expenses arise. Having an emergency fund can help you avoid debt and financial stress, cover essential expenses, such as rent/mortgage, utilities, and food. Rebuild your finances after a financial setback. Take advantage of investment opportunities. Benefits of having an emergency fund. Having an emergency fund can bring numerous benefits, including reduced financial stress and anxiety, increased financial flexibility and freedom, improved credit score, enhanced ability to take calculated risks and invest in opportunities. How to create an emergency fund. Creating an emergency fund requires some planning and discipline, but it's a worthwhile investment in your financial future.